So if you see a broker advertising a 100% deposit bonus, your brain immediately screams, free money.
Oh, absolutely. I mean, it's designed to do exactly that.
Right. You drop in 5 grand, they match it, and suddenly you have 10 grand to trade. Welcome to today's deep dive. Our mission today is to decode this financial marketing and figure out if these bonuses actually help you trade or if they're just noise.
Yeah, and what's fascinating here is that the quote-unquote free money is rarely, well, withdrawable cash on day one.
Wait, really?
Yeah, in the back-end systems, it is categorized strictly as margin support. It increases your account's capacity to take on larger positions, but it is heavily ring-fenced by the platform.
Okay, let's unpack this. Because if it's not free cash, understanding exactly how it functions is the first step to avoiding a trap.
Exactly.
It sounds almost like store credit. Like if you deposit $500 and get a 50% bonus, that extra $250 lets you put more items in your cart, but you can't just take that cash out the front door.
That is a perfect way to put it.
So if I have my $5,000 and their $5,000 bonus, and I take a loss on a trade, whose money burns first? Like, does the broker take the hit alongside me?
No. Your capital burns first. Always.
Oh, okay.
Think of the bonus as a temporary overdraft facility, not a co-investor. If a trade goes south, your actual cash is depleted to cover those losses.
Right.
The bonus just allowed you to open a position that's, much larger than your initial 5 grand would normally support.
So they essentially let me drive a much faster car, but I am entirely liable if I crash it.
You hit the nail on the head.
But what happens if I actually make a profit? Can I just pull my money out?
Well, this is where the strict terms of that store credit lock you in. Brokers structure the fine print so you can't simply withdraw your own profits without consequences.
Like what kind of consequences?
Sometimes taking out your own profits might instantly cancel your bonus. Or, to unlock the funds, you have to meet these really aggressive volume requirements. Yeah, they might stipulate you have to trade, say, 50 standard lots within a month. Mathematically, forcing that kind of sheer volume actively pushes you into overtrading just to unlock the funds.
But if the volume requirements dictate the actual value, here's where it gets really interesting to me.
Right.
Doesn't this mean a smaller bonus with clean rules is actually mathematically better for you than a massive bonus with heavy restrictions?
Oh, 100%. Chasing the highest percentage without looking at your personal trading style is a massive mistake. It depends heavily on who is trading.
Right, so who actually benefits from these?
Well, beginners get some margin headroom to learn tools safely, and short-term active traders, like scalpers, gain operational flexibility from multiple positions.
Because they generate enough natural churn anyway, right?
Exactly. They open and close dozens of positions a day, so they hit those volume requirements organically.
Got it.
But if you are a swing trader holding just a few positions over several weeks, you're going to get burned by inactivity rules. Brokers will quietly void the promotion if your account isn't generating enough daily transaction flow.
Which means the bonus ends up dictating your trading strategy.
Exactly. And the sources point out that the broader ecosystem is crucial. Using Monaxa as an example, platform choice and execution access matter way more than isolated promotions.
That makes total sense. Tailoring the bonus to your strategy leads directly into the psychological dangers of trading with this extra capacity.
Right. If we connect this to the bigger picture, bonuses create a false sense of safety.
Because seeing 10 grand on your screen instead of 5 makes a high-risk trade look deceptively safe.
Exactly. It masks poor position sizing and bad decision-making. You calculate your risk based on the total leveraged amount rather than your actual hard equity.
Assuming the bonus insulates you.
Right. But your real cash takes the hits first.
So for you listening, a simple stress test is to ask yourself, would your strategy still make sense without the bonus?
That is the perfect question.
If the answer is no, your setup is too dependent on the promotion.
A healthy trading decision must remain mathematically sound regardless of whether the broker pulls that credit tomorrow.
So what does this all mean? Treat deposit bonuses as secondary support, not the foundation of your risk plan.
Couldn't agree more.
Which leaves you with a final thought to ponder. If brokerages rely on these intricate bonus mechanics and rules to attract and retain you, how much of retail trading success is actually driven by market skill versus simply mastering the hidden rules of the broker platforms themselves?